South Korean stocks are on an upward trajectory today as the central bank held rates steady for the seventh straight time. It held its benchmark policy rate at 3.5%, saying that although inflation in the country has been elevated, it is still projected to slow down. Bad news on the Chinese front, though, as China's factory activity shrank for a second straight month in November, while non-manufacturing activity hit yet another new low for the year. Neil Wilson is chief market analyst at Finalto. He has more on what this means for the world's second largest economy, but also spillover effects for the rest of the world.
It's another weak reading, second contraction in a row, and the services and construction PMI obviously a fresh low as well. So it's not looking too great, but it's very much demand driven. So we, in the sense that we shouldn't be surprised. The rate hikes that we've seen across the world are biting. We're seeing a sort of general slowing in demand, and so it's not a great surprise there. And you'll be looking to see that might be alleviated going into later next year. Maybe not immediately, but certainly later next year if the Fed does follow through with a couple of rate cuts and the ECB does as well. Then that would alleviate some of those concerns. And there are some green shoots in certain sub-indexes that we've seen, high-tech sort of sectors as well doing quite well. So it's not entirely bad news, but it's certainly just indicative of the sort of tough kind of reopening that we've seen in China. It's not been quite as positive as we would have hoped, but there are signs that things can pick up.
Right, this tough reopening, what does this mean with this weak data for the rest of the world? And also, what should the government do at this point in China?
Yeah, I mean, I think, the problem, the problem for the rest of the world is not really a problem. It's probably perhaps a good thing. And we've seen it in the inflation data. China is just exporting a bit of deflation or exporting disinflation. I think that's maybe what we're seeing a little bit of that. That's good news, in a sense, for the rest of the economy, but it's maybe less good news if you're looking at the headline growth numbers and what sort of China's been the engine of growth for the global economy for a while, and if it's not doing that, then we have to look elsewhere. In terms of the authorities, then every time these sort of numbers come out, you see the market react on the hopes of stimulus, and I think the latest PMI numbers combined with those industrial profits figures that we saw earlier in the week. They do point to perhaps seeing some further stimulus from the PBOC and the authorities in Beijing. They just have to be a bit careful because they're still trying to engineer this deleveraging in the bloated property market, which continues to play out under the scene.
And now let's go to other top business stories from around the world. Elliott Investment Management has taken a $1 billion stake in U.S. oil refiner and pipeline operator Phillips 66. The investment firm has said that it seeks to improve Phillips 66's stock price through improvements in its lagging performance. Shares in early trading of the refiner were up as much as 4.4% on the news. The United Auto Workers Union says thousands of employees at 13 non-union automakers, including Tesla, Toyota, BMW and Nissan, have moved to join the union. The UAW aims to publicly organize the entire non-union auto sector in the US after winning new contracts with the Detroit 3 automakers following a 6-week strike. And after a failed attempt to oust OpenAI CEO Sam Altman by the board, now its largest investor, Microsoft, is getting a seat on the company's board. Microsoft representative will have attendance at meetings and access to confidential information, but won't have voting rights on key matters. Following all of the drama, Altman says in a statement that he feels tired, but also more excited and convicted than he has ever felt before.